Ladies and gentlemen, welcome back to episode 45 of Pounding the Table. It is Fang Week, so strap on your seatbelts because things are about to go down. As always, we got to kick things off with Pounding the Stock Twits. Each week, they share their trending stocks for the week. And one of the best places to also talk crypto stocks each week. This week, obviously, some massive news. Tony, I'll have you get into them. But with the quick rundown, Facebook with the rebranding of their company name, Bitcoin ETF. Bitcoin's also at its all-time high. Dwac. Trump does not go away. We saw an insane run with their fake social media play, potentially what's going on there. So we'll talk about that a little bit. Tesla with the earnings beat close to their all-time high. Netflix had mixed reactions, of course, in earnings, and then Snap with the absolute massive dump there.
Yeah, I mean, I'm going to have to definitely talk about Tesla here for a second. Like their margins just keep improving every quarter, and Elon is just a beast. I mean, they're rolling out so many factories. They're doing so many deliveries that I just think that like everything that we thought about it, that it's going to be making 1 million cars a year is going to happen like a lot quicker than we all assume, right? Like it's happening now. So like it's going to be happening in the next 12 months, maybe 5 million in a couple of years. And so you're just going to see like all the new things come out of Tesla that are going to really just improve those margins. Because I think cars probably one of the like lowest margin things to be doing, but knowing that they're going to start doing everything else that they've just like got down the pipeline, I think that they're going to just start being like a higher margin beast in the future and like pivot a little bit more to like software and stuff and more into that like specific just niche tech focus. Like Nvidia honestly gives me those vibes. I think that Bitcoin ETF is really interesting because like that's real institutional money pouring into Bitcoin. Just another, I mean, that's why it's at all-time highs, right? People bought it for the ETF. So it's like those things are just working in tandem. When things go mainstream, they explode. I think Facebook rebranding is probably a good thing, but like I don't think we're ever gonna like change how we see Facebook. And I think Facebook's one of those like so close to being canceled companies because of Zuck, but it's still around, obviously. And like they own WhatsApp and I use it every day, and Instagram, and we use it all the time. And Facebook, it's like older people use it all the time. But that's really just like, I guess, the new paradigm shift. Like we're moving more towards things like TikTok, which people spend way more time on every day, and social media is driven by youth. So I think these are all like obviously really good things to touch on. It's just like the paradigm shift that we're having in the future. DWAG was nuts, man. I completely missed that.
Yeah, the Trump pump.
Smacking my forehead again for missing that one. Like I literally saw it at like 14, and I was just like, there's no way.
That was 10 pre-market, right? And we still knew about it, but I thought it could go either direction, just absolutely get crushed or ripped.
Yeah, I was like waiting to buy some puts on it when it was like 25 and stuff. And I was just like there weren't any puts. So I was just like, okay, like, I don't know what to do here. And I just like stayed out because I was like, it's already up 200%.
Yeah, it was interesting too, because it got stopped out, right? So it got halted, but the warrants did not stop because you can't stop the warrants. And so those things just kept flying. And I just remember watching it every 2 seconds. It was just like up another 100%. So that was ridiculous. We got Riley in the booth today. He nailed 2 stocks last week. So figured he earned the right to pound a little bit. Riley, you nailed WeWork. You told me to buy that on the IPO. Portillos as a Chicago boy. So quickly touch on that. I know we're going to get into WeWork next week, but talk to us a little bit about why you liked WeWork high level, and then Portillos just touch on quickly as well.
Yeah, thanks for having me on. So, it was a pretty volatile week, and I think WeWork had a nice run. It went to like 1490. It's almost like a 50% move on that. And I mean, I think that people hate it so much that you almost have to love it. Their numbers that they're projecting, they're not doing, too well right now, but, we're coming out of a pandemic, and, the gig economy is going to come out of nowhere, I think, in the next 3 or 4 years. And it's just going to keep getting bigger and bigger and bigger. And so they're all going to gravitate towards these WeWork, buildings. And so they're going to continue to get the memberships. And if they do hit their projections, they're looking at, 10 to 15 billion by the end of the decade in annual revenue, potentially up to 30 billion.
The one thing I wanted just to add real quick on WeWork. So I was living in New York, and I went into one last week, and it was absolutely slammed to the brim. Right. And so, I come from a tech background. I've had a lot of friends that are in tech as well. And they're all moving into WeWorks, right? They're minimizing their office space, and maybe a handful of people want to come into the office. And a lot of these companies are now starting to downsize, where WeWork's valuation way back when they initially were going to IPO was massive, right? But now you're going to—
It was 47 billion. It was crazy.
We'll dig into this a lot more next week, because I know there's still heavy costs associated and expenses that they're dealing with. But I don't know, in a real life example, that thing was packed to the brim like COVID never existed. So yeah, touch on Portillo's.
Yeah, so I mean, just really quickly on Portillo's, I mean, for those of you who don't know, it's more of a Chicago brand, but they are looking to scale pretty quickly all over the country. But they're a fast food place where you could go there, 3 or 4 times a week, and you're going to be able to get, a hot dog, you're going to be able to get a burger, you're going to be able to get a beef sandwich, you get pasta, you get ribs, whatever it is, you get a salad. The women will love it because you get a chopped salad 3 times a week, and you don't feel like you're actually eating fast food. It's kind of like a Sweet Green, where you kind of have those healthy options. And so the big numbers that I look towards is the fact that they make double per restaurant compared to Chipotle or Shake Shack, whatever it is. All the other competitors, they make double per restaurant because they're able to get the customers in, and they have the space to be able to have a lot more people in it. So, it's really cool to see how, they're going public. They're going to raise, 400, $500 million, and they're going to be able to use that money to scale very quickly. They have drive-through only restaurants that they're building now that are going to be able to be the size of, McDonald's or Wendy's. So, that's able to allow for them to scale very, very rapidly and potentially, all over the world, not just in the US. So, they have a lot of things going for them. I believe they did 450 million in revenue last year in a COVID year. So, they're definitely ticking up. And I believe it was still a 20% revenue growth. And so this next year, as they scale up, they could really start to tick back up, and their margins are fairly high compared to a lot of the companies that, are, actually in the restaurant industry. So, they do have high margins, and they do make a lot of revenue. And so I think you saw that they had the impulsiveness this week on IPO. They had an offering price at $20, and they touched, I believe, 45. So, over 100% gain from that offering price. And it didn't even seem like there was that much selling. So I think that there could be still some more upside to it. But, it's one of those companies that I think everyone should kind of look into. I know that no one really likes to invest in the food industry, but, certain things like Portillo's, it's a once in, maybe 5 years opportunity in that space.
Yeah, because I was talking to you about this, and sure, you won that one because I was like, Chipotle is something people may go a few times a week too. Starbucks has done well because that's a daily activity. Domino's is just an absolute, I think, one of the better performing stocks of all time, right? So you do have some big winners in that QSR space, and Portillo's, to me, I guess I thought of it as like this niche Chicago restaurant, but you told me that they're expanding beyond Chicago as well, right?
Yeah, so they're already in 9 states, and they're definitely expanding outside of that. And the thing to note is, so they make $9 million per restaurant revenue wise in the Chicago locations, and they make $7 million in all the other locations outside of the Chicago area. So there is a drop off, but at the same time, they're still making double what, Chipotle would. That's like, even if they're in Indiana or they're in Minnesota, whatever it is. So they still do have very, very good numbers outside of the Chicago area. So it kind of just shows that they're not just a Chicago brand.
Mm-hmm. And are they franchised, or is it all corporate?
So far, it's just corporate, but I believe when I was reading into them that they will look towards franchising it. And so it started out in 1940 something, 50 something. And the guy who started it was called Dick Portillo. And so he ran it up until, I believe, 2010, 2011. And then he sold out for $1 billion to a corporation, some private equity company, whatever it was. And then, they started to grow it even faster than what he was. They were able to use the money that they have to grow it faster. And yeah, the quality is not what it was before, but at the same time, everyone still loves it. As much as the drop off happened, everyone still loves, Portillo's, and they're still going to go to it because of the food that they have and the options that they have.
Yeah. And I like what you're saying about the drive-through only. It does seem like they're starting to integrate a little more technology or modern day approach to that, knowing that, who knows if there's another pandemic coming along or what may happen. People just prefer that.
Right.
That's people just want to get it on the go too. Yeah. Good point. Let's switch gears back to Pinterest, Tony. So recently there was news about PayPal acquiring them, right? So with this acquisition, that's massive. They're showing me that they want to potentially get into e-commerce, right? And I could see a world in which they are starting to launch, almost like a fight against Shopify, right? If they have the payments already set up, who knows? Maybe they get into, setting up websites for brands where that payment processing is already set up for them. But, I know you wanted to touch on this a little bit, and I had a big question. Obviously, we've talked on Etsy quite a bit, synonymous as we talk about Pinterest. What does this mean potentially for Etsy, and overall, what do you think that means for the space?
Yeah, I mean, definitely this is just a continuation of that trend we've been talking about. Like, this is the year of consolidation because these companies have ran so much next year that now we're seeing consolidation in terms of like, okay, well, they're figuring out where they've come and where they can go and how they'll work together in the future because basically shit moved so fast last year that people were just trying to keep up and innovate and get that growth in e-commerce and that growth in payment processing and like expand their moats and expand their user base. But now these companies are like, well, Pinterest gets all this user, like, Etsy gets all these users. Pinterest and Etsy share a lot of the same users and sales and stuff. So I think that, PayPal is making the move that we always talk about, where a company just ends up being a brand. So like, there's nothing different about any of these companies. Like Apple is Facebook, is Google, is whatever. They're like all the same. It's just because you trust in them and they have a brand, they have a suite of offerings. It's all about the users, right? So PayPal onboarding Pinterest, right? That's a bunch of users, and that's just going to be easier in the ecosystem, right? Like it's going to be a one-click like PayPal thing within Pinterest. But then thinking like further, that I always thought that Etsy and Pinterest should merge, just because I think it's like 40% crossover users and sales come from one to the other. So if you think that PayPal is like being, strategic and willing to pay 70 a share for Pinterest, which is like, actually, I don't think that's a bad deal, because they'll make so much money with synergies right away, that they're probably going to look at Etsy too. Because if you think like Square has that suite of services, right? They have like payment services, they have hardware, software, and they also, you can, do your taxes, you can do your, you can do a company schedule, you can do websites from Square, right? So, and you could do the same with Shopify, and then you can do the same with Google, and like, which is next? So it's like PayPal is like, let's do all these things now. And so these companies that get big enough, they just like hire a suite of services. Like if you look at Google, it's not just the search engine. There's like 30 companies under Alphabet. And so Facebook, the same thing. And so these companies that get to that 200, 300, $400 billion range and just continue to grow are all just going to be making the same move to try to stay forever, right? Because like, let's say you have like 5 or 6 different legs. It's better and safer than having just one big leg, because if that leg gets knocked over, you can't stand, versus if you have 6 legs, you're just going to be like Mr. Miyagi, just standing on one foot and doing the crane.
All right, Riley, we brought you in. You earned the right to pound the table. We're bringing back an old name from, I first heard about this at the IPO from Joey Salitro. So the OG of FinTwit, but Marqeta. So not to be confused with Marketo, which is a email service. What is Marqeta?
Yeah, so I mean, kind of just digging into it right away. I mean, Marqeta's been around for over a decade. FinTech started in 2010 by Jason Gardner, who's the sole founder of Marqeta. And for people like Dom, the ones who like the Glassdoor ratings, he's very, very good. So he's a 96% approval rate, 88% recommend to a friend, and Marqeta alone has 4.5 stars, which is fairly good. Now, getting into what is Marqeta, so it's a cloud-based OpenAI platform that delivers card issuing and transaction processing services. And so this is basically just tailored towards the developers, technical product managers, and visionary entrepreneurs at these innovative companies that we'll mention later on. But it's a $14 billion company, so it's not very small. I don't know if we could kind of classify it as a mini monster, but so they did $290 million in revenue in 2020, which was 100% revenue growth. So they had 41% margins, which is not bad. And the net revenue retention rate was over 200%, which is phenomenal.
That's good.
And so they
for folks that don't know, I can help you out too if you don't.
Tony, you could probably
net revenue retention. So it's essentially saying that the companies that they work with today, right? The amount of people that are churning, so leaving their platform, is going to be lower than the rate in which they're actually growing base.
So they're basically they're gaining a lot of customers.
They don't need to grow. Like if they didn't bring on a new customer at all, they'd be growing at 200%. Essentially, that's what
it's an organic.
Current customers
basically.
The current customers are paying more. Like
right, So they're making more essentially from their current customer base in terms of like cross selling and upsells than they are losing. So they don't need to necessarily bring on new customers. It's the same type of thing with like Box back in the day. They had like an insane net retention.
Yeah. And so they have a reach of over 36 countries. And I'll get into the new hire that they have, which, I mean, essentially he used to work for AWS at Amazon. And so he did the Middle East, he did Europe, all this stuff. And so he's familiar with the expansion over into different countries. And so they just brought him on in this past quarter. And so they're going to be able to increase the reach on the countries that they already have. Also, they have issued over 320 million cards, which is phenomenal. I mean, that's huge. It's a huge amount. And so they had 60 billion in transaction volume in 2020, up from 21 billion in 2019. And so just for those of you who are not too familiar with Marqeta, so Marqeta was the first company to offer a platform for modern card issuing and transaction processing while being first to market with multiple issuing and processing innovations, including the first open APIs, JIT funding, and tokenization as a service. And so just digging into these three categories here. So API is the ability for customers to manage software applications hosted on MQ servers. JIT funding, also known as just-in-time funding, automatically funds an account in real time during the transaction process. And tokenization, this allows merchants to delegate sensitive financial info and disguise the info into a more secure token, meaning no data leaks, which is very, very important in today's.
So I had a quick question on that. So just like slowing this down a bit, right? So you mentioned that they're a card issuing. So is that like actual like a credit card or something that 320 million cards have been issued? So is that in people's wallets today then?
So they basically have three different types of cards. So they issue a physical, a virtual, and a tokenized card. And so this is all into that 320 million cards. So it can be basically anything that a company would want in a card, they offer.
Gotcha. Okay.
Tokenized.
Yeah, I was gonna say Tony's just he poked his head up real quick when he started talking about tokenized. That's in that crypto world for him. So are they in crypto then as well, or what? Like
yeah.
I'm trying to get an understanding, and in real world, like there's a lot of cool buzzwords that you were saying in there, and it sounds interesting, but I still am trying to figure out exactly like what they do and how they make money.
Yeah, no. So they just signed on Coinbase backed all these other wallets. And so they're able to essentially put them onto their platform. And like the Coinbase card that Coinbase is releasing that I think they already have released. So that works. That's a part of Marqeta's platform. And so
bullish, Riley. That's so freaking. I just have to jump in for a second and just say how bullish that is. Like, if you think there's 70 million people on Coinbase, and I have a buddy who's been like one of my like good friends from high school has been investing in crypto for like years, just like dollar cost averaging. And he's like, it's actually like my coach from cross country. He like goes to the grocery store when Bitcoin is ripping to buy groceries off his Coinbase card. So it's like, that is going to be a thing, right? Like if you see like, inflation's continuing and you see that people want like a deflationary mechanism, it's like people will be flocking more and more towards using a Coinbase wallet because you can also have cash in there, right? Like if you want to like switch between cash and crypto, and I think people will be doing that more and more synonymously, like just more and more daily, then that's super bullish for MQ. And then I also like the fact that Square is very into like Web3 and crypto. And obviously Square is massive. We've talked about it 100 times in the payment ecosystem. And they are like, people had concerns because MQ is so involved in Square. It's like, yeah, like I'm concerned that it's involved in one of the biggest companies in the world for payment processing. That's like the 8th biggest app in the world. I don't get. Can you touch on that, Riley?
Yeah, because it's like that was my biggest thing too. I'm glad you brought that up, Tony, because I think it was like, wasn't it like 70% or so of the revenue is coming from Square, and so I know that pulls red flags for a lot of investors, where it's like, okay, God forbid if they lost that customer, that's the bulk of their revenue, right? So is that fear? You just mentioned Coinbase, so they are getting new customers, but talk to that a bit for sure.
Yeah, so right now Square accounts for 70% of Marqeta's revenue, which is fairly high. But the way that I look at it is imagine having a Messi or having a LeBron James on your squad for the next 3 years, because they are signed through 2024. Not to mention they own 1.1 million warrants, which are at a milestone. It goes on a milestone. So, as they go through the contract, then they are awarded more warrants. And so we could assume that if they do get renewed even further than 2024, there's going to be more warrants, which I'm fine with. And when you keep someone like that, your business is going to run perfectly fine. Not to mention they also have, so they do profit sharing. And so the higher the transaction volume that a client brings, so, Square, for example, or Affirm, for example, if they have a high transaction volume that's being passed through Marqeta's platform, then they get more of the profit sharing. So it entices these bigger clients to stay on instead of, just, whatever it is, everyone has the same fee structure, whatever it is, the lower clients, they are, paying Marqeta the same amount that Square is. That's not how it works. So they're able to keep Square on, and not to mention they had a Afterpay as a client, and now Square acquired them, so now they even get more. That concentration will probably rise a little bit, maybe on that, depending on how Affirm does as well. But having those two together, that's a pretty big juggernaut that you're going to have as a client, which, I'd rather have a large client than have, a bunch of small ones that are not even at the size of Square. So I'm fine with it being Square.
Just buy them, right? Square's just going to buy them. Like, I mean, Square bought
Afterpay, but they could. But you got to see what happens after this Afterpay, acquisition closes. It's a $30 billion acquisition. They're a $120 billion company. You got to be able to digest that first before you even think about acquiring.
Yeah, I mean, in time, but I think that like it makes sense, right? Like if you think that they have the contract till whenever they have it, right? Like somewhere along the lines of the next couple of years, when Square is a $500 billion company, buying Marqeta for 30 billion is like nothing.
Yeah. They could, but at the same time, you're also pulling a SoFi Galileo type thing where you acquire someone who potentially is, that's going to be a bunch of your competitors. And so it can essentially, people are going to leave Marqeta if they Square acquires them. So you're looking at a way where you can, instead, you do a very, very favorable deal with Marqeta. And that means that they're going to be the middle partner and you don't need to acquire them. And you essentially are going to pay lower fees. So there's no need for them to even acquire Marqeta. And yeah, if you wanted to try and, hurt your competitors by buying Marqeta and then, cutting them off, you can no longer use Marqeta. That'd be, it'd be one move, but I don't think that would even happen. But, I just don't, I like them as a middleman in everything. And that was the reason why I don't really like SoFi as much, is because they bought Galileo, and Galileo has a bunch of clients that are now, direct competitors with their owner. And so I don't like that as,
but I mean, you should think about it like this, Riley, in my opinion. Like, I think Galileo is the only reason why SoFi is interesting, because like they have like a much better technology. Like that's the technology that a ton of people use, right? So like if a ton of people will start using Marqeta, people like to cut out the middleman. That's why Web3 and DeFi and crypto is so big, because there's no middleman. Like I'm the bank and I'm the user. So like, I think that, over time, we'll just see like monopolies form. So like, I think we're both going to be right. I just want to see like.
I mean, it could happen.
Can't both be right. They either acquire them or they don't.
Yeah. Well, yeah. but at the same time, Marqeta, to a lot of these other companies is kind of like what Square is to the small businesses. They kind of cater to these larger businesses and they're the back end. So, if somehow Marqeta went down, a lot of these fintech companies would go down because they require Marqeta's platform. They need to use Marqeta's platform, and they are the best in the class. Like if you're going to try and, issue a card, whatever it is that Marqeta offers, you're going to go to them first. You go to them first. And then if they somehow can't provide what you need, then you go to the other players. They're now that person in this space. So you go to them first.
Who do they compete with? Like sometimes that helps me understand a little bit more of that space they play in, right? Like do they have current competitors? And then once you touch on that, they do have revenue too. I want to know how they the different forms in which they make money.
Yes, so they do have a decent amount of competitors. A lot of them are more bigger. So you have Global Payments, Viserve, and VIS, which these are essentially they're legacy tech platforms that are they do everything. They're kind of like a Galileo where they have all this stuff. But Marqeta is faster than these, and so they're a little bit more innovative on that end. And they're obviously not as old as them, but they have a better platform. And then you also have like Aiden and Stripe, which these are also pretty big fintechs. And so Marqeta has a longer track record with card issuing than both of these businesses. So they the people who want to do the card issuing, they're going to go to the best platform, like I just said before. And so they will go to Marqeta first. If Marqeta can't offer what they need, then they can go to Aiden. And so one of the things too that I like about Marqeta is they've never bought a company in their entire lifespan. Over the 10 years, 11 years, they never bought a company, but they do have now $1.3 billion, I believe. I think up to 1.5 billion in cash. And they do, after the IPO, they have said that they are looking at acquiring a company. And so they can expand out more solutions. And so they can kind of look like more of an Aiden or a Stripe. So, it's very interesting to kind of see where they can go with that. But I mean, they do have a lot of different ways to make money, so they make money from interchange fees, which is, generated by these processing payment transactions on the platform. And they also make money on ATM fees, fraud monitoring, tokenization services, monthly platform access. So, they do have a lot of different revenue streams that they have already, but, being able to have that cash on hand to be able to go out and, add to the revenue streams, essentially get new legs. Like Tony said, you need to be able to have more than just, one or two legs. You need to be able to have those 6 legs where, if one of them falls, 2 of them falls, you're going to be fine. And I think that that's where they're kind of heading.
All right. So I'm just thinking of this. You always say, if I was the CEO, I'd run the company like this. So you're the CEO of Marqeta for today. Like, is there any companies that you're targeting, or what kind of initiatives would you take a look at here in the coming months and years ahead?
Yeah, no, I mean, I think that's a tough one because, they do have $1.5 billion in cash. And I think that they have fairly good organic growth. Now, I think that if they can kind of build out a little bit more of the solutions and take, I wouldn't want to do one acquisition. I'd want to do, 3 or 4 different ones that are in different, areas of the fintech space where, I want them to be very strategic because I want them to stay as the middleman. I don't want them to end up, trying to be a bank when they shouldn't try and be a bank, when most of their clients are, a bank. So, if they can just kind of add, a small little company, 100 million, 200 million there, and it just, they could essentially then cross sell to their already current clients, then it allows them to get the growth back up to where they probably should be over 100%. I think that they're kind of dropping off a little bit in the growth. It's also the seasonality. So they did 100% revenue growth last year, and I think they're pushing towards 70% this year, which it's still very, very good. And so I could kind of touch a little bit on the numbers here. So from Q1 2020 to Q1 2021. So they did 48 million versus 108 million, which is fairly good growth. Cost of revenue was 30 million, and now it's 58 million. So, around the same. Gross profit, 18 million versus 50 million. So that's a big increase. And the gross margins went from 38% to 46%, which is a fairly, fairly large increase. And then the net loss was 14 million versus 13 million. So net loss is going lower, and EPS negative 12 cents to now negative 10 cents. So, it's going in a good direction. And I'm very impressed with what they're doing. And I think that we're going to be able to see that, a firm, which everyone knows now, it's a client, and it's a key client that Marqeta has. And they just signed them in the past quarter to 2024, I believe, up to January 2024. And so, all these clients that a firm is going to get is going to be able to go through the Marqeta platform. And so as these clients, that they have experience even faster growth, it also allows Marqeta to grow even faster as well. So it kind of just depends on how their clients do. And so if Square continues to be what Square is, then, Marqeta's revenue growth is going to continue to increase because their competitors are also, or their clients are also, growing at that pace. So, as the fintech industry continues to accelerate, as everyone pretty much knows at this point, fintech's very, very hot right now. Marqeta is going to be able to be that pick and axe in this entire industry, whether it be buy now, pay later, or, anything, even in the gig economy, when all these companies are, looking towards, potentially giving their employees a card, whatever it is, whether it be the independent contractors, whoever it is, they're going to be able to build these new legs out depending on where the future goes. And as we saw with the Coinbase news and the crypto news, like they can build a new leg pretty very quickly. Like they can do it, whether it be crypto or, any single field in the fintech industry, they're going to be able to go in there and help everyone out.
Have you heard of High Note? High Note
No, I haven't.
They're going to be jumping in here as a competitor. I just popped them up. They just did a 54 million Series A round. Former PayPal executives, they're coming after Marqeta, apparently, or Marqeta. So the former COO of PayPal, current president of commerce and payments at Google, CEO of Upgrades on their board. So there's something to take a look at. Ex-GM of PayPal as well. So that's something that, as you mentioned, like fintech is definitely one of the hottest spaces at all. And, with Tony's love for crypto in that space, like more and more popping up within that DeFi and crypto world as well. So that'll be exciting to keep an eye on here. And I know that MQ, to kind of round the bases, they have, what's their ties into crypto? I know you mentioned that they're starting to get into that a bit.
Yeah. So, I mean, so they work with Coinbase, like I said before, so they have the tie-in with, a lot of these larger crypto companies. And so when they want to issue, rewards, whether it be, with money or even crypto, they could, a little bit of Bitcoin on a cashback type of thing, it goes onto that card that this person's using. And so Marqeta issues this card that is tied with, Coinbase or a backed, whatever the crypto company is, and so as these companies, continue to get the clients, get the customers. And I believe I saw that the US, like up to 60 something percent people in the US now hold crypto, and or I think it was 14% in the US hold crypto, and 60% of the people in the US want these rewards. And so it's a very, very large amount of people that want these cards and stuff like that Marqeta can offer. And so it kind of adds, a little bit more of the growth that I think that we're kind of seeing on a lot of these things like buy now, pay later. So I think that you're going to see these legs that Marqeta is building, they're going to experience the 100%, 200%, 300% revenue growth in just that single leg. And just for an example, a lot of people love buy now, pay later. So Marqeta essentially year over year did 350% revenue growth on just buy now, pay later. And that's not even including what this next quarter is going to look like after Affirm, gained all these different clients, Amazon, all the fun big companies that everyone's hearing about. Like that was not even into the revenue growth that we saw. So you're going to be able to see in this next quarter how well Marqeta is actually handling these platforms and how the growth is going to look like going forward the next 12 to 24 months. And one of the things I kind of want to touch on is like the clients that they have, not just in the crypto, not just at Square. So they have DoorDash, they have Uber, they have Affirm, like we said, they have Afterpay, they have JP Morgan, they have MasterCard's buy now, pay later, they have Google, they have Klarna. I don't know. I always mess that up. And then they also have Instacart. Yeah. Then they have Instacart. So, they're gaining these companies that are massive. Instacart's not going anywhere. Uber's not going anywhere. DoorDash is going nowhere, or it's not going anywhere.
Yeah.
All these massive companies.
Sure.
Yeah, exactly. And Instacart, I mean, everyone kind of, I think in 10, 15, 20 years, no one's really even going to want to go to the grocery store. They're probably not even going to, they're just going to be warehouses like a Sam's Club where you just click whatever you want and then it gets delivered. And so, Marqeta is going to it's going to be the platform that, after or Instacart, runs on. And so you're going to be able to see all these other companies too. They're going to be able to gain new ones every single year, every single quarter, even that are going to just be in these different little industries like e-commerce, all these different huge industries that are going to come around. They're going to be the backbone of these industries, because without the payments, then you're going to have no commerce. As simple as that. And so being the backbone of the commerce, it's very important. It's kind of like a Cloudflare, a little bit towards the internet side, but at this point, it's just commerce that Marqeta is the backbone of. So that's why I'm very, very bullish on them. As you could call them a pick and axe, but at the same time, like without them, like do you really call Cloudflare pick and axe? Probably not. They basically are the internet at this point. They run the internet. Without them, we saw what happened.
It's really right. You're saying pick and axe. It's pick and shovels, my friend.
Yeah. Okay. My bad. Pick and shovel.
Violent.
Yeah.
He's the axe murderer.
This is definitely interesting. And you mentioned that just to kind of get a few people to perk their heads up, and that's been absolutely on fire. So huge shout out to Rahul, who kind of continued to pound the table after Tony. What'd you hit that at initially? Like 30 or something ridiculous?
Yeah, I think so.
When the internet went down because of them, I think they were like 30, 35. So if you would have bought when the internet crashed because of them, then you'd be a very wealthy person.
I first bought it at 19 and I dumped it as soon as the first earnings exploded it. And then it just like never looked back.
New all-time highs every single
I got back in the 30s, and then I was like selling in the 60s and 70s, and now it's 100 points higher. But like, obviously it's overvalued. But I mean, great things can stay overvalued. Software is trading at like 50 to 75 times sales. So
speaking of software, Tony, let's kick this over to earnings week. It's really the Super Bowl of earnings week this week. Starting off with Facebook here on Monday. On Tuesday after the close, we got AMD, Microsoft, Google, Visa, Twitter, Robinhood, QuantumScape. On Wednesday in the morning, we got Boeing, Coca-Cola, GM, McDonald's. So boomers, wake up. That is your morning for you guys. We also have Spotify in the morning. And then at the close, we got Ford, Teladoc, Twilio, ServiceNow, Upwork, and eBay. Thursday, before the open, we got Shopify, MasterCard, Caterpillar, Merck, obviously with the COVID news here, AB InBev, Comcast, SiriusXM. And then after the close, we got the beast with Apple, Amazon, Starbucks, Western Digital, Atlassian. And then Friday, we got more boomer stocks. We got ExxonMobil, Chevron, Phillips 66. And then if you're trying to take a cruise, Tony, Royal Caribbean Group will also be after, or excuse me, before the bell there on Friday.
Yeah.
So what are you looking at? We got all the things here. We got some big names as well. But what are you specifically excited about?
Looking at the Fangs and then like some beasts like Shopify coming out this week. Like I'm really interested that Shopify added NFTs to their marketplace. So I want to see how that like, how people react to that once they start like showing guidance and like what they're thinking about doing for that. That's definitely, my focus on crypto now. So that's going to be interesting to watch.
With that Netflix, destruction that we kind of saw there, like obviously there was a mixed earnings, but they have some exciting things coming up with the game. Like, do you think this is going to affect the rest of the Fangs, or how will that impact everything?
Yeah, I don't really think Netflix is like a really great. I mean, sure, because like Netflix is based on like it's a lot of it's like ads, right? Like you saw like Facebook's been getting crushed and like Snapchat got crushed, and so like people are, I think they're overselling, stuff that I think that it's going to come back like pretty quickly. And so like I'm more excited, I'm more interested in seeing what the big Fangs do, because like they do drive the market. Like if Apple's down 20, like we'll be down a lot. Like the S&P will be down a ton. And if like Google's down 200 and Amazon's down like whatever, you know what I'm saying? Like those are the big ones that are making up the majority of the market. So those are the ones to watch more importantly than anything, right? Like if all Fangs are good, then it's blast off, So we'll see. I think we're also at like a very high SPX level. So definitely, honestly, thinking this week determines where we go for like the rest of the year. Like if the big Fangs are good, like I wouldn't be surprised. Like, we might go to 5,000 SPX. If the big Fangs are bad, like we might base for a little bit, which would be healthy. Like we've been running a lot. So.
And it's really interesting, right? We got Facebook on Monday, and then, Google and Microsoft earlier in the week. Like for those of you, that are newer, and myself, this is a question why I brought it up. Like how much will that impact, let's say Facebook and Microsoft kind of crash? Is that going to impact, even if Apple and Amazon have phenomenal, earnings, those days in between, is that going to just like bring those others down as well?
Yeah, I mean, like it'll definitely, like those all move together. Like Fangs, like if Facebook rips, Google rips, even if it doesn't report. And I'm not saying like on earnings. I'm saying like like let's say Facebook has great earnings, Google will rocket after hours, and like the Fangs will as well. And like anything with ads will rip again and stuff. So it's just kind of like how that works. Like if Amazon rips Shopify, well, they're like the same like earnings week, but like that's the point, right? The companies that do similar things and they're like, good, similar size and like strong backings will run together. Like Amazon rips, Shopify and Mealy will rip. Like Shopify rips, Amazon and Mealy will rip. So it's like everything kind of works together because it's just indicative of trends. Like, the companies are good enough already. You don't need to be like super like, oh, what, like, I don't know. People do too much DD, man. Like,
it is crazy. Like when we first like started this, I remember it was like you, Smarter Trader Online, like the OGs of the game, and now every single person, and which is amazing. Like I love it that you go on Twitter now you can really dig in, and people have good DD. It's like the microcosm where we saw the ape with the bananas last week, on Wall Street. That was just like, that moment was really, I think, historical, because it's like, yep. Listen, MFers, like we are here, we are live, and retail is starting to play a role here.
Can't run, can't hide. If you're not in crypto, you're not going to make it.
Tony, you've been aping into to crypto, so I know we're going to start touching on that a little bit more next week. But as we wrap things up, we got this crazy week ahead. Any last thoughts here as people enter into the upcoming Fang week?
If you're playing earnings, I'd play sympathy plays over straight earnings. Like it just does not seem like great RR here. I mean, like premiums for things are really high. Like maybe you'll get a double, maybe you'll get a triple, but like at what cost? Like if you hit 5 earnings, you'll probably miss half and then you're break even. So like if you're playing, like if you want to play like Facebook earnings, you could play like, a similar ad user company kind of situation. If you want to play Amazon, you could just like play Mealy or Shopify. Like those are kind of things that like I always think about for earnings. It's like every time Facebook rips, Google rips. So like if Google is reporting and Facebook reports and it's down, like I'd buy Facebook. I will be looking at Facebook just because like, it's already gone down and Google could make it go back up, right? Because like, even if Facebook has like company specific bad news or company specific good news, and then Google does the opposite, it'll like move more that way too. So be interesting to watch that. I would just say stay fluid, guys, because like this, I think it's going to be a big week. Like every World Series of earnings is a big week. So dip your toes in, but don't dive head first. Take a look around so you can keep pounding the table.
Drip on 100, say less, that's me. Y'all on level 1, on level 3. Pounding on the table for my team. Every night I flex, I'm making big moves. That's a big move. Big money, big moves. That's a big move. I'm making big moves. That's a big move. Big money, big moves. That's a big move. Yeah. They can play, don't talk about it. Master P, I'm about it. This one here for all that try to count me out and they still counting. Honestly, I never doubt it. Say the top is never crowded. Well, I'm trying to climb the mountain till I need a few accountants. Stock is rising, perfect timing. I'm in Brickle with the try. Shawty sliding, she want sushi, she want eel sauce for the rice. I just peel off at the light, took her heels off for the ride. Don't say real talk, just a lie. I'm a real one, I provide, yeah. Drip on 100.